Welcome to the Dental A Team podcast. I'm your host, Kira Dent, and I have this crazy idea that maybe I could combine a doctor and a team member's perspective because let's face it, dentistry can be a challenging profession with those two perspectives. I've been a dental assistant, treatment coordinator, scheduler, biller, office manager, regional manager, practice owner, and I have a team of traveling consultants where we have traveled to over 165 different offices coaching teams. Yep, we don't just understand you, we are you. Our mission is to positively impact the world of dental, and I believe that this podcast is the greatest way I can help elevate teams, grow VIP experiences, reduce stress, and create A-teams. Welcome to the Dental A-Team podcast. Hello, Dental A-Team listeners. This is Kira, and I am so excited right now to do this podcast because I met this company, it's been probably about a year and a half ago, and I've been hearing good rumors about this guy. His name's Scott Haberman, and the way I found him is from one of my good friends who's a dentist in Colorado. And he said, Kira, this is who I use for my CPA, for my taxes. You should talk to Scott. So then all of a sudden I started seeing Scott's name pop up over and over and over again. So then I reached out to Scott. I'd been recommending doctors to him. And Scott literally is one of the greatest, most giving, gracious humans you will ever meet. He works for EideBailly. And then I just did a podcast with another person in EideBailly named Art Wiederman. And if you guys didn't hear, I was on their podcast as well. He'll tell you about it. But I'm so excited because I have both of them here today to talk about a zone that I don't even know. You guys know me. CPA bookkeeping, it's a necessity of business, but not my favorite thing to do. So I'm so jazzed to have them on here. So welcome, Scott and Art. How are you today? We'll start with Scott first. How are you, Scott?
Doing very, very well, Kira. Thanks for having us. We're excited to be here on a nice Friday afternoon.
Yeah, absolutely. Thank you for joining me. And Scott, let's just set the record straight because I have a firm belief that you never sleep because anytime I do an email intro with you and another client, you literally respond back in, I think 5 minutes. At the most, it's an hour, even in the middle of the night. You are all do you ever sleep? That's my first question for you.
A couple hours a night.
Awesome.
Lots of coffee.
Lots of coffee. Scott, you're seriously one of the most genuine people I've ever met. So I'm super jazzed to have you here. And Art, how are you today?
I'm wonderful, Kira. Wonderful. Thanks a lot for having me on your program.
Absolutely. So you guys work with EideBailly. Art, I want to make sure we don't miss it. If you guys have not heard, Art has a phenomenal podcast. Art, tell us a little bit about your podcast as well before we dive into today's session.
Thanks, Kira. I appreciate it. So my podcast is called The Art of Dental Finance and Management with Art Wiederman, CPA. We publish every week on Wednesday mornings. We are approaching our 100th podcast, and we have a very special 100th podcast. And until I have it recorded, I'm not going to tell anybody what it is, but I'm real excited about it.
That is exciting.
And we have topics, pretty much anything in the financial or management side of dentistry. And Kira, I will tell you, again, done almost 100 of these over the last 2 years. The one you and I did about a month and a half ago, I don't remember another coach that I've had on the podcast who's given so much information and so many great tips in the manner of 55 minutes. It was amazing. You just blew me away.
Oh, Art, I appreciate that so much. And truly, that's a huge compliment. I know in the podcasting world, we all podcast together and we all do things. And so I know what it's like to have guests on my show that I just feel blow me away and add so much value to our listeners. So for you to give me that compliment, massive, massive appreciation. Thank you for that.
And so you can send the $5 to Art Wiederman, care
okay,
of EideBailly.
I'll Venmo that over to
California,
you right now.
92780.
He gave everything there.
What can I tell you?
Well, I am so excited and so appreciative. Just so you guys know, EideBailly is also a sponsor for the Women Dentists Connect and also for Dental A-Team. So I'm super appreciative of you guys just supporting Dental A-Team so we can give back. Our mission is to positively impact this world of dental, and you guys do it as well. So Scott, I'm actually going to flip over to you a bit through this podcast because I work primarily with you. Art and I have just met through events and podcasting. But Scott, I send a ton of clients over to you. So kind of walk us through what exactly does EideBailly do when it comes to dentistry?
Yeah. So thanks for that. Thanks for that intro. And it's great to have Art at our firm. So for those listeners who may not have heard or been familiar with Art Wiederman in the past, so we merged in with his firm, and they became members of EideBailly. 2 months ago, Art? I think
about 3 months ago.
Yeah. So we've always been pretty heavy, me personally and professionally, in the dental world with family, friends, and obviously clients, spending a lot of my hours in the finance world for dentistry. And so we will help with anything from bookkeeping to taxes to tax planning, strategy, minimization, R&D tax credits that we're looking at now, cost segregation studies, any kind of fraud that might be happening in the practices. I'll get our fraud team plugged in to investigate there. So we really try to help from every angle, but bringing Art and his team in kind of doubled our bench strength with my expertise and my team's expertise, adding Art and his team, Don Watson, Pam Chamberlain, and those folks really helped us to provide an even higher level of service to these clients. Just from his years, what Art is it now? Your 100th year practicing accounting?
Yeah. Teddy Roosevelt and I were best friends back in the 1910s, 1920s. In fact,
I love it. I love it so much. So Scott, with that, I really want to dive into this because I personally and selfishly, you guys, I podcast because I get to meet really cool people and just pick their brains. And Scott's one of the ones I love. So it's a podcast that I'm also going to selfishly, guys, I'm going to ask my questions for our own business. It is October right now. When this airs, it should be October, maybe very 1st of November. Clearly, hopefully people are starting to think we're in Q4, tax planning. I know COVID this year hit is kind of funky, but let's talk about, because this is where I usually will come at you and pick your brain of what do we do for tax planning strategies, end of year tax planning, the tax credit. I know you were saying the R&D tax credit. So kind of just take a stab at this because I don't ever know what to do. All I know as a business owner, 1, I don't enjoy paying taxes. 2, I'm always looking for ways to lower my taxes. And 3, I often feel just stupid that I don't even know half the things that I could be doing and just feel blinded that I like blindly hand money over to the government when if I knew just a little bit more, I could actually prevent that. And that goes for not even just dentists, but team members as well.
Mm-hmm. Yeah, it's so important to have an eye on your financials. And you may understand, okay, income and expenses, but all right, what are the right ones to deduct? What are the right ones to write off? Well, you don't know unless you're talking to your CPA or your tax preparer or your tax strategist, whatever you want to call them these days. So right now, I think the most important thing to do at this time of the year is for most of our docs, they've been having great months. So they might have a ton of cash in the bank account right now, and they're thinking, okay, holy smokes, okay, what's going to happen come 6 months, 7 months from now when the due date rolls around to file a tax return and make that payment? Well, there's so much uncertainty with the CARES Act that you really need to have some updated financials in front of you. Sit down with your CPA, your tax preparer, or so forth, and run a couple scenarios because there is so much uncertainty out there. Number 1 is the Ppp Loan program. So most of our docs and business owners in any industry had applied for the Ppp loan and received it anywhere from, I think my highest balance that one of my docs got was a couple $1,000,000. So right now, as the way it's written, if that loan is forgiven, then those expenses that are paid with the PPP funds are non-deductible, meaning if you're looking at a P&L for your year-to-date income and it shows $300,000, but you have $200,000 of expenses that you paid with your PPP money, well, your real taxable income is $500,000. And as Art and I have bantered back and forth before, okay, well, if that's forgiven in 2020 or 2021, when are those expenses non-deductible? Is it this year? Is it next year? Well, we're not sure yet. They haven't given any guidance, and we're still waiting on that. Go ahead, Art.
And one of the great things, Kira, is I had a phone call for about an hour this morning with one of our top PPP guys in our firm. He's actually out of Rancho Cucamonga, Teg Allen. And I asked him that question point blank. I said, have you read anything? And he said, we're going to the top of the firm. We're trying to figure out what to do. It can go either way. And we here at EideBailly have a really great relationship with a young woman by the name of Megan Mortimer, who's a congressional lobbyist for the American Dental Association. So we've been feeding Megan information and asking her to go to the SBA and go to Treasury because she can do that and say, these are the concerns that we have. We need some answers to these questions. And with all of the confusion and bickering and fighting and election going on, nothing is getting done. And unfortunately, we, Scott and I, as advisors, are having a very difficult time of saying, well, is your tax liability, as Scott said, is your income 200,000 higher? Is it 200,000 lower? I personally think the expenses are deductible for 2020 because there is no loan forgiveness in 2020. So, the advice on the PPP is pretty much use, for the most part, your 24-week period. There's no rush to file for forgiveness. You've got 10 months after your 24 weeks is up, unless you're selling your business, and you do want to file for forgiveness if you're selling your practice before.
Sure. That makes a lot of sense.
Right. And so I think the discussion this year is going to be like a discussion like any other you've had previously as a business owner, just because of all of the different opportunities that we've taken advantage of over the last 7 months, and all the uncertainty with the HHS funds. Okay, how do we report the use of those HHS funds? Well, that's now up in the air as they change the guidance there too. And so there's going to be a lot of just thoughtful conversations that you need to have with your advisor. It's not going to be the typical checklist of, hey, deduct this, do that. Let's sit down and talk about the business as a whole, rather than just key tax deductions. But there are some cool tax deductions out there that Art and I have been talking a lot about with our clients for the past year. One of them is the research and development tax credit, which has actually been around since the 1980s to really spur investment and creativity here in the United States economy, as incentivized under the U.S. tax code. This credit has recently been looked into a little bit further in our client group here in the dental world of, okay, well, let's see if we qualify. Let's see if our clients qualify. And so we've actually capturing this for a number of our clients. Are they doing crowns, bridges, implants, dentures, night guards? Everybody listening to this podcast is doing those. Let's kick the tires there, and let's see if there is a benefit that they capture. The federal benefit's a pretty good size, but in Art's world in California, if you have any listeners in California and some other states out there, the credit could be even higher in that local jurisdiction than for the IRS's credit. And so something that's pretty important to consider right now.
Yeah. And go ahead, Kira.
No, go for it. I'm literally over here taking notes. Don't worry.
So
just
one
me.
of the things that we might let your listeners know is that we actually have a landing page on our website. And if they go to www.EideBailly, and that's EideBailly.com/dental RD, that's DENTALRD. That will point you to some really good articles about the R&D credit. And it will also point you to a questionnaire that'll take you 10 to 15 minutes to fill out. And then if you just push the submit button, one of our team members from the R&D credit group, headed up by Joe Stoddard and Heidi Lannon, they will get back to you, and they'll have a conversation with you, and they'll talk to you about your practice. And if you're doing new innovative things and new creative things, new materials, you've gone to a Coyce course, so you've gone to Spears, you've gone to Pankey, you've gone to LVI, you've gone to all, doing a whole bunch of new stuff. You're doing. Maybe you're an entrepreneur. I just got off the phone for an hour with a dentist who's got a new invention that he's working on. I said, you gotta call these guys. So we had one prosthodontic group that we got them over $400,000 in tax credits, and you can go back and amend 3 years worth of tax returns. So it's really cool.
Are you guys sick of trying to figure it out on your own? I know I am. When I'm trying to run a business, sometimes I just think there's got to be a better way to do this. And so for me, my answer has been to find someone who's done it and does it really, really, really well. I'm talking the best of the best of the best. I want someone who's been in my shoes, somebody who understands what I'm going through. When I was looking for the consulting business, I found a coach who literally has run a consulting business. Well, that seems like the perfect fit. So you guys, right now, we have a few spaces open in our Platinum Consulting. That is in the consulting where we actually come to your practice. We help you get systems implemented. We don't just tell you what systems to implement. We actually implement them with you and for you. You guys, it is one of the best investments I have ever made is to hire a coach who understands the business I'm in, who's lived it, who's done it. And that's what we in the Dental team do. We literally physically fly to you. So if you're sick of trying to figure it out on your own, if you just want somebody who understands you, join our Platinum. I'd love to have you. I'd love to have our consulting team come out and see you, be in your office, be with your team, and truly help you get onto the easy path of dentistry. It doesn't have to be hard. So join us in the Platinum. We'd love to have you. That is really cool because this is the stuff that I feel like it's like Harry Potter's library. Like, how do I find all this stuff? It's like, hang on. So there's this magic world of tax credits and different things that we can do. And I think this is where business owners, dentists, Scott, I know you guys are with a ton of practices, DSOs especially, I know is a big zone that you really specialize in. You also specialize in single practice owners as well. Honestly, Scott, you just help literally anyone I send your way, which I appreciate so much. But like, what are some other things? So let's pretend 2020 didn't exist. I know that's like really impossible for anybody, but what are some of the things that you guys would normally be looking at? Because I feel this is Harry Potter's library of tax deductions and write-offs. And I just feel frustrated because I think so often a lot of CPAs that I've experienced in my business ownership, I feel like it's kind of maybe like dentists or maybe like, a mechanic. It's your favorite tools. My husband's a pharmacist and he talks with lots of physicians and they have their few drugs of choice that they're going to recommend. And that's sometimes what I feel happens with CPAs is they know the few that they know really well, that they feel confident in, that they can recommend. But I feel, and maybe I'm wrong, maybe this is just a hunch and I'm very wrong. I feel there's this whole library of additional tax credits and write-offs and things that we could be doing that 90% of people don't get. So if it wasn't 2020, what are some of those things? And am I crazy for thinking that there's some other way to do this that we just don't really know about?
Yeah, that's a great question, Kira, and I like to point to some of those tried and true ones, but you always hear about the home office deduction right off your car, right off your laptop that you use maybe a couple minutes a day for work. Those are great ones, obviously in the right circumstance, but I also like the ones where you look at, especially my favorite clients, the ones that are expanding and doing entrepreneurial things. If they're buying a building and moving into their building, well, rather than appreciating that building over 39 years and waiting those 39 years to capture that deduction, let's take most of those deductions in the year you purchased or remodel that building. And so we can really lower your liability in that year that you put that building into service. And it's really a time value money play. So $1 in your pocket today, Kira, is worth way more than $1 in your pocket 39 years from now, right? And so not just one thing, but there's a byproduct of that strategy. So if it lowers your income a certain amount, well, maybe if you've been excluded from capturing that 20% QBI deduction that has been around for a few years now, well, maybe that lowers your income enough where you can capture that 20% deduction, that phantom deduction. And so there's really all these moving parts where it just takes time to sit down and look at those moving parts of, okay, if we pull this string, maybe we can get these deductions here in this year, or maybe we wait until next year because you just put into service, $150,000 piece of equipment. And so those are the ones I like looking at, are ones that we can capture some of those phantom deductions, and in retirement plans, and maybe Art can talk about those too. There's just so many out there, and people get scared of retirement plans, and they think, okay, well, shoot, they're so expensive to implement, and I'm on the hook for a ton of contributions for my employees. But there's a lot more out there than I think a lot of people just gloss over in the first glance.
Mm-hmm,
so.
Mm-hmm.
Well, we do. I do a lot of lecturing to groups around the country and talking about retirement plans. I am someone who just beats people over the head about retiring, because when you're 30, 35, 40 years old, you don't think about retiring. But I'll tell you what, when you get to 55 or 60 and you start maybe getting a little tired, or you've done this for 30 years and you want to go play and you don't have that retirement fund behind you, it makes it really, really hard. And there are basically three different types of retirement plans you can set up. For someone starting out, you set up what's called a simple IRA, and that's for somebody who can have about $30,000 to $40,000 or less to put away. That's a great place to start. No administration with the IRS. It's really easy, minimal contributions to employees, but you're limited to that. someone who's got $40,000 to $100,000 to save, and you have to figure out how much you can save. We use a profit sharing plan with a 401k component, put the spouse on the non-dentist spouse on the payroll, and we can get 70, 80, 90,000 for the doctor and the spouse, and maybe 10, 15 at the most for the team. And then if you're really doing well, a defined benefit plan with the new cash balance rules allow you, Kira, to put away hundreds of thousands of dollars. And if we have a doctor, you have one of your clients, Kira, who's maybe 3-4 years away from retirement, what we've done in the practice, Scott and I have both done this, is you set up a defined benefit plan, and maybe they fund $125,000 a year for year 1, 2, and 3. And we set the formula up in such a way that in year 4, when we know we're going to sell, bam, we put $400,000 away. And because the money's coming from the sale of the practice, it's a great way to defer the sale of your practice. So, just things like that Scott and I are talking to our clients about all day long.
Super interesting. Okay. This is like totally going off topic. I heard this the other day, not with a dentist, but like, I think people also get really leery because they don't want to do anything illegal. I know I'm that way. And I also don't like surprises. I've done so many personality tests, and one of my biggest core values is like certainty. And so my CPA, he laughs at me because I literally have 3 different tax savings funds because I get so scared that I'm not going to know. So I have like the main one in my operating account, then I have one in my backup account, and then I have a third backup account. And technically I have a 4th one under at my house just in case something happens. But like, what are some of the other things right now? So the home expenses, the home office expenses, or is this something where, and like you listed off the defined benefits flow, the spouse on payroll, the QBI deductions. I feel like a lot of that's Latin to me. I'm like, okay, spouse payroll got defined benefit flow, but it almost sounds like we need to talk to somebody and have them specifically look over ours. Scott, I know last year I called you. I think I was told I was going to pay a lot in taxes. And I think I called you at the end of November and said, Scott, what am I supposed to do? And you and I came up with a plan. And I know some people didn't necessarily love it because they were concerned this year I would get boomeranged with those expenses. Like we went and I spent a ton through the month of December, but I bought it on things that I would be using this year. So I wasn't and it didn't boomerang, and I'm going to do the exact same thing this year of spending it on things that I would already be spending on the business to reduce it. So I'm really curious, do you guys recommend quarterly tax payments? What are your thoughts on making those pre-estimated payments versus not? Give me some ideas on that I know a lot of doctors and offices deal with as well.
Yeah. So maybe to give you some background on the quarterly payments. So the IRS and states want their money throughout the year. And so there's 2 ways to pay, really. There's withholding from your salary if you're a W-2 employee owner, which most docs are through their S-Corp, or there are through quarterly payments. So if you don't do withholding. So you can pay in either way. But one strategy that I like doing with my docs is, okay, well, let's save that money. Let's not pay in quarterly during the year. And if you're an employee owner, which most of my docs are, you can run a special payroll at the end of the year and withhold that special payroll towards federal and state income taxes. That way, the IRS considers that withholding as paid in throughout the year rather than just quarterly. And so it's a good way to hold on to your cash and not have to pay over quarterly payments throughout the year. Because if you're not doing those quarterlies or paying in throughout the year, the IRS dings you with interest and penalties because they want it throughout the year. And so that's a good way to avoid those penalties and interest if you miss those quarterly payments is, hey, let's run a special payroll and boom, the IRS considers that paid throughout the year. And so that's a good trick that's out there to kind of protect yourself at the end of the year of, okay, well, maybe I held on to all this cash because I thought the practice wouldn't open up for another 6 months or so. And now I have all this cash here. And so I didn't make my Q1, Q2, Q3 payments.
Now the one thing you got to be careful about, that's great advice, and we use it too. But doctors, if you're going to do that, don't spend all the money before the end of the year, because then Scott's going to come to you in December and say, okay, remember, doc, we talked about this in February and we need $50,000. Oh, well, I bought a car. Well, then you're going to owe $50,000 because you don't have it. So you got to make sure that you don't spend it.
Mm-hmm. That's good. So I don't know, and I'm curious what you guys think. Like right now, I feel, hey, we're into Q4. I should be meeting with my CPAs, my tax strategists right now to be looking at what did we already do this year? What are we estimated to do for the rest of the year? And what do I need to start doing now so that way December doesn't hit again? Is that what you guys recommend? When do you guys recommend people should start reaching out to their tax advisors and their CPAs to start preparing for the end of the year? Because I'm not one that likes to wait until, April of next year. And then I'm like, shoot, it's all gone. That gives me like insane anxiety thinking of people doing that. So what do you guys recommend is the best thing to do?
So I like to have at least a couple conversations with my clients during the year. So one in the summertime, as we've had at least 4 or 5 months in the books, and then one towards the end of the year. And so I reached out to clients back in July, August to try to sit down and have a conversation. Most of them were just so busy that none of them could really meet. Probably only met with a couple of them. But now is the time. Let's look at October's financials once they're closed, sit down in early November to mid-November and really project out, okay, November's going to look like this, December's going to look like that. What can we do right now? And I say, don't let the tax tail wag the dog. Let's make good business decisions. But what can we do right now to limit our tax exposure come April of next year and beyond? Like let's cash flow beyond that. What's 2021 going to look like? Well, if it's anything like 2020, it's going to be a shot in the dark, obviously, just the way COVID turned things around. But let's try to plan beyond that too.
Right.
The one thing that we do need to keep in mind, Kira, is that when we look at some of these numbers, a lot of our doctors are going to think, oh my God, I'm down 50%. Well, they're probably not. They were closed for 8 to 12 weeks.
Yes.
But many of them weren't paying their team members because they were on unemployment. They weren't paying lab. They weren't paying supplies. They might have been deferring their rent payments. So, and then when they came back, I know, Kira, I'm sure a lot of your clients, because I'm sure you and I have talked that through the pandemic, you were like working your tail off to make sure that everybody was planning for the opening and the reopening, all this stuff. And you had a lot of clients, I'm sure, Kira, that had 110, 120% of their pre-COVID production because you had all this pent-up demand. They might have made up some of the profit that they lost. So when you look at the end of the year, a lot of our dentist clients may not be down as much, and maybe they might owe some money. The other thing we have to keep in mind, Kira, is that we have an election coming up in a couple of weeks, and I'm not getting into politics. I promise. I swear to you,
you did say you're best friends with Teddy Roosevelt at the beginning, so
right.
you know, just putting it
there
back out there.
TR, that's my man. But anyway, here's the fact: if the White House and the Congress goes to the Democrats, tax rates are going up for dentists. That's all I get to say, and that is not a political comment. Former Vice President Biden has said that he's not going to raise taxes for anybody making less than $400,000 a year. I don't know how they can do that. They just came out today that the federal debt went up $3.1 trillion this year so far, and they're not done yet. They've got to raise revenues. So I think that if you're looking at what happens in the election, if one of the three houses, if you will, the White House, the Senate, or the House Representatives stays in the Republicans' hands, you're probably not going to have much in changes in taxes. If it goes all Democratic, you are going to have tax increases. They're talking about eliminating the capital gains rate with 15 to 20% for people that make over a certain amount of money. So if you're thinking about selling your practice, I had a conversation today with a doctor. I'm thinking about selling my practice. I want to get this money in the bank before the end of the year because I think the capital gains rate's going to go up. So these are things that we have to watch for. And that's the great thing about coming in to meet with someone like a Scott Haberman who can sit down and say, this is what's going on. Here are your choices. And we have this really cool software, Kira, that we can literally sit there and do what ifs. I can put in 200,000 and change it to 100,000 and change it to 50,000 for this deduction. And we can sit there and say, okay, if you do this, this is what's going to save you, but this is what's going to cost you next year. And that's the important part of sitting down with a CPA. Sitting down with a CPA, two things it does. Number one, our goal is to save you as much money, run up the federal deficit as much as we can. That's our goal.
I did not just say that, guy.
Exactly. And number two is if you owe money, we want you to have as much notice as possible. I mean, we get new clients, Scott and I, because I get 3-4 calls at least here. Well, my accountant called me on April 14th and told me I owe $60,000. That does not happen in our office unless someone doesn't engage.
Right. Well, and I think something that I didn't realize being new to business was this wasn't last year, it was the year before. And I called the person, I tried to call a tax strategist and I was like, hey, it's March. I was just told I owe this amount. What can I do? And they said, Kira, the tax year is already closed. Like December 31st, there's really not a lot we can do. There's still some things, but usually it's a lot better if you can prepare in the year that before it closes to plan for it. That's why you have those discussions. So I love the things you guys have shared. I have a few more questions, but I'm totally going to ask off air because they're like real dicey questions that I cannot wait to ask you. Don't worry, guys. If Scott and Art give me great answers on it, don't worry, I'll bring them back on so you guys can hear what I want to know. But honestly, I feel like you guys just gave so many things. So you guys look up, just as a quick recap of things that Scott and Art talked about. There was the R&D tax credit. Look to see, and I love, Art, how you mentioned that you can go back and amend your tax returns. So you can go back, I think you said 3 years. Was that correct?
Yeah, it's 3 years from the due date of your tax return, including extension. So if someone did a study now, they could go back and amend 17, 18, and 19.
Cool.
In California, you can actually go back 4 years. So we amended 16 for some folks. So it's great. And our R&D people are top notch. I've talked to them at length.
Cool.
And they know their stuff. They're really good.
Awesome. Good to know. You also talked about, I loved this, and Scott, I want to pick your brain more on this later. And guys, seriously, call Scott, call Art, call EideBailly. I appreciate them so much because I literally will just pick Scott's brain and ask him these questions. But the expanding to a building, taking the deductions this year, that's an option that you can do. So really discussing that because I had not heard of that. And I'm so excited because I'd been contemplating buying a building this year to purposely reduce what we did this year. But I was told that I would just have to wait and amortize that over the next 39, however many years it is. So that's another thing we discussed. There's also the QBI deduction, the spouse on payroll, the defined benefit flow for the 1 to 3 years. And then if you're planning to sell, it sounds like there's a lot of great things. Also the end of year payroll, running the special payroll throughout, instead of if you're not making those quarterly tax payments throughout the year, making sure you're meeting with your tax strategists, your financial advisors, summertime, and then also end of the year to make sure you guys are prepared for the end of the tax season. And then wondering what's going to happen in 2021 with the election and everything happening this year about the capital gains tax. So if that's something that you're looking at, making sure you're preparing for that this year. Holy moly, talk about jam-packed.
Well, now, Kira,
30 minutes on that.
You better be careful because the way you're talking, we might just end up offering you a job in our tax department. You sound like a real tax specialist.
I don't, because I'm like, okay, take note. I got to talk to Scott about expanding a building. Like, fantastic. I need to know about that. Then I want to ask about some other questions of things I've heard. So I think at the end of the day, what I love is I get real leery about tax people because who knows if they're being honest and ethical, who knows if they really have your best interest, and who knows if they are part of the Harry Potter library of tricks and magic, or if they just have subscribed to your county library. Like, come on, there's 2 different libraries. Who are you trusting with your financial freedoms? So I love that you guys are a part of this, and I appreciate both of you for being here. Scott, if people want to connect with you, they want to ask you more questions, what's the best way to connect with you and EideBailly and Art? What would you say?
I'd say give me a call, 970-999-8932. That's my direct phone number. And Art, I'll let you go ahead and give yours for your contact
Can I just
info.
Interrupt real quick? That's Scott. That is Scott. He just on a podcast going out to thousands of people, just gave you his direct cell phone. And I'm not kidding. If you text him, call him, he will answer. He will respond back to you. Scott, I just appreciate you as a person. Okay, Art, what's yours? Don't worry, there was no pressure to put your phone number out there, Art.
Well, I'll give you my office number, which is 657-279-3243. My email is Wiederman, Wiederman, at EideBailly.com. And again, listen to the podcast. We got some really cool stuff coming up. Kira's amazing, just absolutely amazing. You are amazing.
Thanks, guys. Thanks.
And yeah.
Scott, what is your email if people like myself are a little scared to call people? What's
Sure.
the best email for you?
I'm not too intimidating. And just
I just feel
let's have a
chicken.
video call.
I feel so scared. Like, what if I don't know what to say? Like, is there an easier way to pretend like I know what I'm talking about? Can I just send an email?
So my email address is shaberman, so SHAB as in boy, ERMAN at EideBailly.com, EideBailly.com. I know that's a mouthful. So
well, and I'm glad to know I've mispronounced your name for the 2 years I've known you. Haberman.
Everybody has mispronounced my name. Teachers, colleagues, family has mispronounced my name. So I let it ride either or. It's potato in my Haberman. I don't correct anybody.
Good to know.
And the state of New York spelled my name wrong on my birth certificate. So what's that? They really did.
I love this. All right, guys. Well, there you have it. Be sure, I am a big proponent of being proactive instead of reactive, especially when it comes to your finances. EideBailly is somebody they've been so helpful for the clients we've sent their way. So check them out. And as always, guys, thank you. And thank you, Dental A-Team listeners. And I'll catch you next time on the Dental A-Team podcast. Guess what's back, you guys? Women Dentists Connect. Yes, Dr. Summer Casmel and myself are putting on our first ever virtual event. We did it last year. We had raving fans, and due to COVID-19, we decided we're going to continue on. So mark your calendars, November 13th and 14th. All women in dentistry. We don't care who you are. If you're a doctor, a treatment coordinator, scheduler, biller, office manager, spouse, we want all females to come with us to Women Dentists Connect. So pop on over to our website, womendentistconnect.com. Tickets are on sale right now. And we even did a thing where it's your entire team can actually come. We want all of you to come. It's going to be CE. We're going to talk about mom guilt, how to run a successful business. We're having an incredible speaker lineup with Dr. Mark Costas. He's our only male cameo. We're having Desiree Yazdan on social media marketing, Aaron Elliott, who's talking about sleep apnea. We're also bringing on Dr. Amanda Wilson to talk about ortho. And of course, Dr. Summer Casmel and myself will be there talking about how to hold your team accountable, how to run effective meetings. So don't wait. Get on over to womendentistconnect.com. I'll see you guys November 13th and 14th.
And that wraps it up for another episode of the Dental A-Team podcast. Thank you so much for listening, and we'll talk to you next time.